Hello, it's Brian Resnick. It's question and answer day. And one of the questions that came in was about a fixed annuity. Now, fixed annuities are different than equity index annuities and different than variable annuities. So one of the callers from one of my radio TV shows sent a question in. He understands that I really don't like variable annuities, but what about fixed annuities? He's getting 1.8% for 4 years. I don't like fixed annuities for the same reason I do not like variable annuities or equity index annuities. You have lockup periods, you have surrender periods, you have high expenses internally, and you only get a small percent of what the actual portfolio is making from the insurance company. All the insurance company does is they take your investment that you give them. Let's say you buy a $100,000 annuity. They invest that money wisely in a diverse bond portfolio. And let's say that bond portfolio today can make 4%, which you could easily do on T-bills or on a 2-year government treasury, 4%. So this particular caller says, I'm making 1.8% for the next 4 years. Well, if you can buy a treasury bond or T-bill and make 4% over the next 2 years, and the annuity company is paying you 1.8%, do you now understand why annuities, fixed annuities, are also just as bad as variable annuities and as equity index annuities? The bottom line, if you invest your money correctly and wisely, without hype, without emotion, without thinking you're going to get some free money bonus or some risk-free asset, then what you do is you have a better opportunity to make the spread on the money. So you can give over half the return of your fixed annuity back to the insurance company. You probably didn't know that. Or you could have a real money manager manage your money properly and correctly and potentially keep all of that income that's coming from that particular fixed income portfolio. So again, wise decisions, educated investors have a better opportunity to be successful. Investors who fall prey to emotion, sales pitches, free money bonuses, going to the free steak dinner and being sold an annuity is never wise for your money. These are long-term investments that are going to basically yield you zero to little return. Interesting conversation that I had on my radio show last week. If I look at the S&P 500, including dividend, the last 5 years, it's made about 60% return in the last 5 years. Even after the current pullback that we've seen about 20% this year, even after that. Do you know what the average equity index annuity that I've reviewed has made the last 5 years? And remember, equity index annuities are touted to be safe. They're touted to have free money bonuses. They're touted to make stock market returns by these charlatans that have free steak dinners. Most of these equity index annuities have made between 0 and 1% a year, each year, the last 5 years. So how is it that an equity index annuity is touted to make stock market returns when the S&P has made 60% with dividend, including the current pullback, mind you, and an equity index annuity has, let's say, made less than 5% total in the last 5 years? Equity index annuities, variable annuities, and fixed annuities should never be in your portfolio. They're sold by salespeople with glorified titles of advisor or wealth manager, sold to unsuspected investors who are looking for something free that you're never going to get. If you're tired of bad advice and you're tired of being sold and you want a real money management firm to manage your wealth and you're not an emotional investor, call Resnick Wealth Management for a consultation to discuss our services. There's a big difference in money management firms, and it's about time you stepped up and took advantage and made sure you protected your money from those charlatans and hire a real money management firm like Resnick Wealth Management. Have a safe and profitable day.